everybody to this monthly webinar concise version of what are we thinking of. Uh, we will take you from the from portfolio performance, followed by the theme of the month, electronic manufacturing, and concluding it with the macro updates the economy is undergoing. Uh, Across the portfolios, we obviously saw the month of October correcting. Most of our portfolios have done meaningfully better compared to the markets. Coffee can has delivered negative 2.5% versus 2.7% for the index. Couldn't clean mid cap create a 40 basis points alpha. Emerging by giants continues to be the pick of the lot with 1.5% versus 3%. Down for the BSE 500, and 10x fell in line with the BSE 500. So our performance over a 3-year period also continues to be strong across the portfolios, and we would obviously believe going forward that particularly large cap oriented names will see a rebound, post the very sharp underperformance compared to mid and small cap names. Moving to electronic manufacturing, which has been the most discussed about topic recently. So undoubtedly, India has, in a post-COVID world, shifted some gears towards manufacturing in the country. The whole ideology of India being a China plus one is a fantastic narrative that has been built. However, the ground realities is a relatively different. We believe that India will definitely focused on delivering, manufacturing capability in the country. We have the technical prowess and the know-how. However, the required requisite infrastructure is somewhere we sort of lag behind, and we lag behind by several years, not a year or two, because the whole massive growth that the China saw in the 1990s was mainly led by the infrastructure, the utility, the roads, the logistics support that the manufacturing also needs to succeed, and not merely a couple of policies that will drive them home. So undoubtedly, our market share is less than 3% in the global EMS, will obviously quadruple as we move ahead. There are no questions about it. But mainly, we believe this is going to be led by import substitution opportunity than we becoming a meaningful export manufacturer, or the China plus one playing out in this particular sector. Moving ahead, when we look at this, how are we trying to make some changes because of the several initiatives uh, that needs to be in place to succeed in this Make in India program. So obviously our Make in India program, we obviously have to create a necessary skilled force, have to emphasize on infrastructure development. So India is taking several measures in building infrastructure, creating a skilled force labor, as well as a massive boost that delivers not only PLI incentive, but also from a taxation relief, that if a manufacturing sector is set up, he will be subject to less than 20% tax versus a 25% flat taxation for the corporate world. Importantly, the PLI production incentive gives a target for production to be attained, and only post that you end up getting the benefit of the schemes. Our export volume target is quite strong as we move ahead. And importantly, to set up the sector, or to give some boost to the sector, India is adopted a protectionist approach in line with a lot of policies that the global manufacturing hubs have done in the last 2 decades. So we definitely are trying to make some impact on this particular subject. However, our strong belief is India will not be a export oriented business in the manufacturing. We will primarily, and in the initial phase, be focusing to substitute imports, and to begin with primarily on the low and mass and value products before we progress into making our own chipsets. And in that regards, we have seen a couple of investments already been announced by large groups. So moving on from what's the theme to what's happening around in the macro and the market. You look at the economic update, India completely stands out compared to most of the markets. If you look at most emerging markets, they have started seeing a contraction in the PMI. So below 50, just to remind you, below 50 reading, it means a contraction in the manufacturing index, and above 50 is an expansionary mode. India and Indonesia, the two emerging markets, continues to sort of progress, although on a month-on-month reading, it's showing some moderation. And the good news is also followed by a GST collection, which is up in 12% and all-time highs in the recent number, which is October. But coupled with a very, very subdued inflation, which is a great news from an interest rate cycle in India. We believe the unemployment rates, is still in the 18 to 24-month range period, and that remains an area of monitorable that could derail the opportunity that is present with. But however, if you have meaningful unemployment, that could lead to some concerns moving ahead. Moving ahead, when you look at how the earnings season have panned so far, because eventually everything boils down to fundamentals and the earnings. The companies that have reported so far, 70% plus of the businesses have reported earning growth of 5%, of 30% plus, and the revenue growth is similar to what was delivered in Q1. Growth is completely driven by auto, cements, and oil and gas, whereas consumer staples continues to remain a little sluggish, mainly led by weak rural demand. We believe as we progress and we kicked into festive season, the overall growth should rebound, particularly in rural markets, and a lot of sectors that are exposed to rural recovery. We talk about two-wheelers, you talk about apparel in the rural market, and so on and so forth. The outlook, will be constructive, given that the real wage inflation in the rural market has turned positive after a negative territory for last 2.5 years. With that, I would like to summarize saying that valuations are still below long-term averages. There are certain mid and small cap pockets where the valuations have jumped up to recent highs, but that's also is supported by a strong earnings growth. So we believe as we move ahead, we are into a strong economic sort of zone, with the festive season looking quite stable, and valuations are not at an expensive zone. So with that, I would like to comment my sort of this session, and wish you and your loved ones a very, very happy festive season going forward.